Hello, everyone. I'm glad to welcome you today to Altus webinar, where we'll exchange perspectives on the theme of outsourcing in the CRE market as a general theme, reflecting on valuation processes in particular. We'll approach this from an angle of outsourcing in the context of the real estate valuation processes as a whole. I'm Nicolas Le Goff. I oversee the advisory practice at Altus Group, and I'll be moderating this webinar. I have the pleasure of hosting three panelists with me today. So we have Nankumar Diangi. You're the Conducting Officer, Finance and Valuation at CBRE based in Luxembourg. Pascal Brailleur, your CFO, COO, and Conducting Officer, Valuations, UCI Fund Administrations and Operations at BNP Ream, also based in Luxembourg. And Daniela Dragois, you are Advisory Manager at Altus Group, also in Luxembourg. Fund accounting and many other services have been outsourced in the financial industry for such a long time now that in many cases it has become the norm. As the industry keeps evolving and modernizing itself, use cases evolve and needs change, and the question as to how much of valuation-related operations can or should be outsourced becomes more and more relevant. All of you are involved in the real estate valuation cycles and processes, but all from different vantage points. And we will use today's session to explore the different challenges that you're facing in these operational cycles and discuss how outsourcing may help alleviate some of these, but also where limitations might appear. But before we go into that, I would like to set the scene. Over the past few years, the real estate markets globally, and more specifically in Europe, have faced numerous challenges, from the global pandemic, the volatility induced in valuations through full lockdown, and how these have been translated in valuations. Later, in an inflationary environment, the sharp rise in interest rates shaking valuations again and limiting transactions very much. And now, in a context of heightened macroeconomic and political uncertainty, the need to see through the fog and have clear view on valuation trends becomes ever more important. Through these events, investor requirements, but also industry guidance and regulatory pressures have shifted. So my first question would be whether you can describe some of the changes that you've experienced and how these have affected your day-to-day in the context of valuations. And maybe I'll turn to you, Pascal, first to expand on this topic.
Yeah, so thank you very much for the invitation. So it's true that since COVID time, we had like a turmoil in valuation and in transaction. Well, obviously we have a peak in interest rates and with a kind of systematic decrease over valuation. So the discussion with the valuer was quite difficult at the time, and the lack of transaction was not helping in the valuation process. Then the trends turned, and we have seen a decrease in the interest rates. And then the discussion is how we bridge the gap with what we were previously. And then we had the other way around discussion with the independent valuer over the increase in values, which was not at the time systematic. So it was quite a difficult time. We are now seeing a bit more stabilization in certain classes of assets and even increases. I may refer to logistics, for example, and office being still a bit complicated. So we hope to see a bit more transactions in the different jurisdictions to be able to support the valuation process and the evidence of valuation which are done, most of them on a quarterly basis.
Thanks, Pascal. And Nankumar, maybe turning to you as well on some of the changes in the landscape or in the requirements that you've witnessed over the past few years.
Yeah, thank you, Nicola and Altus, for allowing me on this panel. So actually, to add to what Pascal just said, on top of all the economic parameters, we also had, I think, an increased scrutiny from the regulator, the CSF in Luxembourg, with a lot of focus on our open-ended funds for liquidity, stress testing, and valuation. So I think these were the main work stream that we had to focus on, over, I think, since 2022. So, and I think these were actually the challenges that we faced here at CBRE, to ensure that we are always in line with whatever, is required by the regulator.
Yeah, I agree completely. If I may, indeed, we have additional scrutiny, but it's only on liquidity, but it's also over the process itself with different reporting, but not only at the IFM and the valuation function level, at the fund level. So
Yes.
it's that entire chain of governance that is expecting something over valuation, and we are pleased to meet the regulator expectation on that. But it's true that since 2 years, the number of questionnaire on-site or off-site visit at various level of the chain, so IFM or funds, were increased, and the requirements were also much more increased than what it says in the past. So you need to have a robust valuation process within your organization, but also extremely well documented over the procedures and policies.
Thanks both, and maybe Daniela, from a valuation management perspective, how do you say these points that are brought up on increased scrutiny and then the need for the robust process and other points mentioned, how would that resonate in relationship to your day-to-day work?
Yeah, thank you, Nicholas. Indeed, it's something. It's a big shift that we see since COVID. So yeah, as Nonkumar was mentioning, and Pascal, evolving requirements, a very difficult macroeconomic context. So that's definitely something that had an impact on the real estate market and the valuation side. And from my perspective as a valuation manager, I would say the big shift that we see is that all those changes had an impact on the increased use of technology and data analytics in valuations. What we hear from our clients, and this is something that that investors are demanding more and more, is that they need to see more transparency within the valuation. So they expect to have much more detailed breakdown of where the value change are coming from. And this is especially important in today's volatile macroeconomic context, and also back in 2021, 2022, when we were facing difficult context. Inflation was running high, which of course put upward pressure on rents. Landlords were able, of course, to index leases, push new lease terms higher, and that supported valuation in a certain sense, that brought increased income. But from late 2022 onwards, what we saw on the market is that ECB started raising interest rates to curb inflation. And this higher cost of capital, of course, translated into outward pressure on property yields, negatively impacting the values. So, we had these two forces pulling in different directions: inflation supporting higher rents on one side, and interest rates dragging yields on the other. So yeah, being able to separate and to quantify these effects became really crucial for understanding what was really driving the value change. And there is where technology, data analytics, and also our knowledge on real estate valuation could help to understand those movements. I would say valuation are not longer just about reporting that the values went up or the values went down. It's really about explaining why, and specifically where the values come from. Either is market driven, or as performance driven, or perhaps other considerations. But yeah, definitely it's increased trend that we see on the market, increase demand for transparency in valuation overall.
Thank you. So it sounds like there are a few major themes emerging from the different feedback here. The first one or would be on the increased need for transparency and analysis. The second one would be a need for robust processes in place, and the third one I think would be for all the actors involved to have a very strong audit trail in place to be able to retrace the steps and justify the different levels of challenge that have been applied and stress testing that has been applied on the valuation processes. So it seems that all of this represents an increased volume of workload that is necessary to go through the valuation processes. Would it be fair to say or fair to assume that the time needed or the time left to go through this heightened volume of work has not really changed since before? So it's more to absorb in the same amount of time. Would that be a fair statement?
Yeah, I would say so. It is something that's been added to what we are currently doing. So, and for us, it's something we thought already 3 years back. So where we had the discussion, on the transparency side, what to do. Do we do it in-house or do we move to a third party to get into this valuation process? So we opted for a third party of our time where we use a platform of a third party to review the valuation, because just to put it into context, we have around 280 assets for which we perform quarterly valuations. So we had to, really look into whether to in-source a significant team or rather get a third party. So where the advantages would be, from the third party, what we saw is they are an independent third party from our firm. They are also providing a good platform where there's already comparative data, and they are experienced, so it's not just like going to a small firm. So they are an experienced firm on whom we can rely upon. So I think that tilted us to go for the third party involvement. But again, it's not a delegation, it's more a support function which they are providing to myself and to the AIFM.
Thanks, Dan Kumar. And you raise a few points which I'd like to maybe come back on in later in this discussion on maybe some of the limitations of the model and some of the areas to keep in mind. But maybe coming back to the feedback that was provided on the additional requirements and what that means in terms of workload, with the transaction volumes slowing down very much. What we've witnessed certainly is a decrease in available resource or certainly a scrutiny on costs. So would you say that this general tightening of costs and additional workload and additional requirements have created an additional strain on existing teams? Has that required a ramp up in capacity or in competence, or were your teams already significantly equipped to deal with these changes? And again, maybe starting with you, Pascal.
I think it's a big mix of both. Obviously, they stepped up and they had to take over this additional work. But on the other hand, we also look at our processes, trying to make it efficient even more, and also look on a risk-based approach in terms of valuation to be able to focus on significant assets and significant valuation expectations. So the answer is both. So work on the process itself, and a risk-based approach, and have the teams scaled up based on the requirements, which are anyway we have to do them. You're talking about stress testing. All the policies now need to include stress testing, for example. So there's a step up in the capacity of the team, but the team stayed stable. We just reorganize the priorities and focuses on having our processes more efficient.
Okay, understood. And so that's very much applicable to ramping up the internal team and the internal model, and maybe turning towards you, Kumar, with the outsourced model. I would assume, or is it maybe if you want to share some experience on how you faced that? Has the outsourcing helped leverage or do a lot of the heavy lifting, or has that still represented a significant increase on the strain on your team?
No, actually, the outsourcing did help me a lot, especially on the review process of external appraiser report. That said, it's not just I'm dumping everything on the third party. It's not like this. As a conducting officer, I'm still involved in the process. So at every process, having my comments on the platform, discussing with on the country calls. We have organized country calls, so I'm participating and discussing with other stakeholders. So there has been some work which has been taken over by the third party. But that said, there's been additional work that I had to do as an oversight on the third party and on the process.
So it's
a help. It evens out. Yeah, exactly.
It's help. It's not a full shift. And maybe Daniela, if you want to share a bit of the perspective from the valuation management, maybe that echoes some of what you described before.
Yeah, sure. So from my experience as a valuation manager, the support we try to bring to local teams, it's really about helping them navigate the more complex or sensitive areas of the valuation process. Coordination, it's of course part of what we do on a daily basis, making sure that deadlines, deliverables are aligned. This exercise can be particularly challenging, especially when we are involved in cross-border portfolios with a large number of assets and different valuation firms, as Kumar was mentioning. Beyond, I would say, this coordination part, the value our clients see comes from our independent reviewer position. So, and that's because we tend to act as a bridge when there are different views on certain assumptions, different opinions on valuations between the different third parties that could be involved in the valuation process. So we usually see property managers being involved, asset managers, which of course may have a more granular view on the assets. Sometimes we will also see the JVs being involved. And so the co-owners of the assets, they could have a more specific knowledge on a more niche market. And of course, the valuers, different valuation firms, which sometimes may have different point of view on some assumptions. So this conflicting view on assumptions is even more relevant in today's volatile market, where fortunately there aren't always enough transactions to discuss and to use as a tangible reference. And often the discussions they just turn around market sentiment. So discussions are not always easy, and some calls can sometimes get quite intense. But asking the right questions, digging into the models can sometimes unlock some situation and really help manage expectations. Perhaps I can give you a very concrete example. Something that happened last quarter is that we assisted one of our client, a pan-European fund, in running an alternative scenario to see the impact of a lease renewal on the value. So yeah, in theory, we would have expected to see a positive impact since the cash flow is more secure with a longer lease. The world is also increasing. So yeah, the asset management team expectation was, of course, to see a significant uplift on value. But then when we look closer to the valuation model, the current lease in place was already quite long term, 8 years, with a tenant renewal option. That was and that was the tricky part, because this was already considered by the valuer in the model. So naturally, the additional 5 years extension of the lease didn't materially change the value, the security of the cash flow. So yeah, this lease renewal didn't bring the uplift that the asset manager was expecting. So yeah, it's true that without being able to specifically show and dig into the model and having this level of granularity in terms of value change and which assumptions is impacting the value, the discussions that we could have been much more difficult than they actually were with the asset managers and the valuers. Of course, by bringing this exercise, the discussions were more transparent and allowed to reach an agreement at the end of the cycle. So yeah, it's I would say a mix of our market knowledge and the data analytics that we can use to increase transparency and to ensure that the process is as robust and as transparent as possible.
Yeah, thanks. So that example is quite compelling, and it touches upon the combination of the increased workload that comes with the robustness of the process, but also the increased need for expertise in supporting clients and going in depth in the reviews. So it really touches upon both the audit trail and the transparency, but also on the robustness of the process as a whole, which is the key requirement for the processes. But maybe if we take a bit of a step back and think about the different themes we've touched upon already, it sounds there would be a play to suggest that the need for outsourcing is a bit of a numbers game and is a bit limited to treating high volumes and supporting in high volume situations. Would that be fair, or is that a bit of a shortcut and there are more different scenarios across the spectrum between a fully insourced model and the fully outsourced models? Maybe staying with you, Daniela, if you want to share some of the tangible use cases that we have, and then maybe it'd be good to hear Nankumar and Pascal's thoughts, since you would represent both ends of the spectrum on where intermediary situations would make sense.
Yeah. So yeah, again, and this is something that we hear from our clients, is that the main triggers they see to outsource the valuation management function often start with a scale complexity of the fund, when portfolios cover multiple countries, different asset classes, various valuation firms, and yeah, as I mentioned earlier, a variety of third parties being involved in the process, it becomes very, very difficult for local teams to coordinate everything consistently and to provide a transparent framework where all parties can discuss assumptions, they can provide their point of view, and finally reach an agreement. So yeah, to give you an example, we do have a client, a recent client with investments across 10 countries, if I'm not mistaken, in Europe, covering multiple asset classes, including alternatives, which it's again a more niche markets. Yeah, and they work with 5 different valuation firms, 10 different property managers, and 16 different JVs, and of course that's on top of their local manager, local asset management team. So yeah, handling these valuations in these conditions can be extremely challenging, and it's something we usually hear it's most difficult, especially within the current context, where local teams are not don't have the capacity to cover all this amount of work.
Thank you. So this is another, I would say, highly complex situation with many different parties, and it's clear that having everyone sing along the same music in such a context is quite a challenge. Where would you see, and maybe I'd be keen to hear Nankumar and Pascal's thoughts, but where would you see a use case for an outsourced model in maybe a more simple setup, with whether it would be lower frequency evaluation, lower models? Would there be a case for different situations, maybe smaller vehicles?
Pascal, you can go first.
Yeah, so it's interesting. I think maybe the truth is in between. We have obviously, you understood, you explained it well, an internal model. Taking back the example of Daniela, it's all start with the day one, which is the organization of your valuation process, and how many valuers you're going to use within your framework. So we try to limit as the number of independent appraisers in our framework. You set up also the seed with them with the standard expectation, and then you can obviously cover much more jurisdiction and much more assets if you negotiate a pan-European mandate. That's what we did. Then goes along with the expertise. We rely also a lot of internal expertise. So it stays with the asset managers that we have internally, which knows perfectly the assets, which are part of the process in their input. We also gather information from transaction team, research team. So based on that, we can handle internally the evaluation process on pan-European jurisdiction. Now, it's true that if you come with a fund with a huge number of assets, for example, 800 assets in a worldwide jurisdiction, this will be a bit more complicated, and we may need to outsource it or partially outsource it. The question is, we want the value for the money. So obviously, this has a cost which goes to the performance of the fund. It's paid by the investors. So we expect as well that the third party we would use will bring value and performance into the valuation process. As we are asking, by the way, our team to focus as well on performance and try to get performance indication or performance values for our funds in the valuation process. So I would see a hybrid mode based on the internal expertise you have, the capability to absorb high volumes, and also as I say, the value added function of the role that you're outsourcing and how you can bring performance into the process.
Yeah. So again, it seems there are many benefits, but different situations. And maybe Nankumar, if you have any thoughts.
Yeah, sure. I think to add to what Daniela and Pascal have said, we recently I think for us it's more an outsourcing model rather than having it in house. That said, we do have one fund where we do it. I do the review myself, but we are talking about on a biannual basis, 15 assets. So there you can still manage. They are all European, and there's much concentration in one country. I think one of the drivers to have it in source was the cost element. So we had to, we had already an agreement with the investor on the cost, so to keep the cost, at a very competitive level. So adding that extra layer of cost wouldn't have been accepted. So we said, anyways, we have the capacity, so we would do it in house. But for the others, where it's on a quarterly basis, and also we do have funds who have been investing in Asia. So there, it's on top of a language barrier. We are in Europe. It's difficult for us to get, to be well informed about the situation in Japan, China, Singapore, Australia, Korea. So there we do, the help of a third party is very useful there.
Yeah, absolutely, and I think that's an interesting illustration of where the driver could be not just the volume, not the complexity of a portfolio or the volume, but complexity which lies elsewhere. So thanks for sharing these insights. I think we've touched upon many things. I'd like to maybe think about some of the limitations of the outsourcing models, and there's one I would like to touch upon in particular, because you mentioned it earlier on, Kumar, and this relates to the role of the conducting officer in particular, and the difference and the nuance between the outsourcing model and the delegation model, because I know that's there's a fine line there, and there are some pitfalls that need to be avoided.
Yeah, definitely. I think we've seen that, where, the CSSF in their annual report, they've touched base upon valuation, and they clearly mentioned that, the role of a valuation function, and they also, you see that, part of a questionnaire, what are the tasks that have been done, and, by the valuation function. So for us, it's very important that the valuation function is involved, and not passively, but actively involved in the process, in the valuation process. So be it, having an oversight role on the third party, being involved in the valuation process itself, being in, discussing with external appraisers, with asset managers, and also playing that role, of an arbitrator, between the asset manager and the external appraiser. Because in this market, sometimes the asset manager would have a different point of view as compared to the external appraiser. So as a valuation function, you need to come in and say, look, we need to discuss this, take into consideration both points and try to find a common ground, which is all in line with our regulatory framework and, of course, the valuation policy.
Absolutely, and I think you really explained it quite clearly there, that the choice of an outsourcing model is basically getting additional support in your role as the conducting officer, as opposed to delegating the function of the valuation officer. Would
Definitely.
there be, I mean, we mentioned this is an obvious pitfall. We mentioned the limitation, which of course in a business environment, outsourcing to a third party represents a cost, and that's just as any service is something that needs to be addressed and needs to be balanced. It goes without saying. Would you see any other significant limitations on outsourcing such a model, or would you consider these are the main ones? Maybe.
For me, those would be the main ones, but I don't know, Pascal or Daniela,
Yeah,
they might have some.
it's like for every outsourcing can apply to other function and valuation, but when you do it internally, you control the information, the time for information, and all the different reports, and the stakeholders of this information can technically get quicker access to it. You have also, if you have internally, you have a better expertise and knowledge and depth of the data. And you are able to answer technically in a more efficient way to our investor, which is also for us very important. So not only performance, but also how we reply quickly to the different stakeholders, and one of them are obviously the investors. So we are dedicated to that function. So the team is available on a daily basis to answer any queries on the valuation we have under our responsibility. And then to touch base on what has been said by Kumar, it's true you can outsource, but as he said, anyway, the responsibility stays at the IFM level, at the conducting officer level, and that's why the regulator is always focusing on and requesting the IFM to have. It's obviously easier to justify and to prove when you have an internal model with a conducting officer, head of valuation, and a evaluation team below. In an outsourcing model, you need to respect the circular about outsourcing, about the different reviews, the different KPIs that needs to be put in place, and also that indeed you are not just ticking the box, but really active in the process of valuation.
Thanks. Thanks both, and maybe to kind of close the loop, if we look on the flip side of these limitations, maybe as a response to the points raised on data knowledge and the need for control, maybe turning to towards you, Daniela, on how this resonates with regards to the depth of the knowledge of the assets that can be achieved through outsourcing, or maybe the analytical capabilities.
Yeah, it's true that one of the fears we sometimes hear about and around outsourcing is the perception that it means giving up, control of the process and control of the outcome. I would say, my opinion is that outsourcing doesn't mean giving up control. The clients always remains in charge of the strategy, and they take the decisions. The key decisions relating to the asset evaluation. What outsourcing does, it's really providing extra support, helping with the coordination, translating data in insights, ensuring that there is consistency across the portfolio, that there is a proper process in place. Of course, as a valuation manager, we don't have a very granular information on the assets, and that's the job, I would say, of the asset manager, to really bring this extra layer of information related to the asset. The JV, they can bring their local market knowledge on some specific niche market. So our role is really as key coordinator and independent reviewer to ensure that transparency is at the highest level, and that everything, the process and the deliverables are provided in due time. So it's local teams, I would say, can focus on what really matters, and in that sense, it complements the internal resources rather than replacing them. Our support, I would say.
Thanks, Daniela. Would that resonate with your experience, Kumar?
Yes, definitely. I think to complement what Daniela said, what we recently had, we started since earlier this year. So we have analytics for our funds compared to a benchmark, which is used by the third party. So it goes into a very granular detail, and for us, it's very good comparative. For instance, if we've got assets, industrial assets in Germany, it is compared to what is happening overall in Germany. Whether our assets are moving in the same direction as the market, or do we have some asset specific situation which is prompting a significant increase. So I think a data driven and transparency, the audit trail, because these are the things that I think the regulator would be looking to see, that there's an audit trail of comments, of challenge, that you do as a valuation function vis-a-vis both your third-party provider and also on the report of external appraiser.
Thanks. So it's almost adding an additional layer of information.
Yeah.
Pascal, sorry, I think I
yeah, if I may, you can also achieve transparency with an internal model, obviously, and we do. It's just a matter of organization and means. So we also do comparison with index internally. We have a CI. So I believe that the help of an outsourcer is that if you cannot provide this transparency internally, you don't have the means to do so. That could be helpful. But if you can do it internally with also a cost efficient way of doing it, I believe it's also good to go for that organization. So in conclusion, I would say it depends on the means that you have internally to achieve that result, even if we agree on the final results about transparency and documentation and robust process. So an outsourcer could help you even temporarily, the time that you set up the scene of your organization to achieve that result. So it depends how mature is your organization in that respect. And I believe, there are always both argument for both sides. I can speak only on mine, even if I used in the past also outsourcers for a temporary basis because I didn't have the resources. Now that we have a full stabilized team with a robust process in place and transparent, and we cover the funds properly, we don't need it. But obviously, if one day things are changing in terms of organization, significant higher volumes, that's obviously something also to investigate in the future, but still bearing in mind the value for the money I was referring before.
Yes, thanks, Pascal. I think this is a good point to indeed conclude, and we've covered on the different benefits and the different limitations that the outsourced model can bring, and as you said, the limitations, the arbitrage is quite often a cost benefit one. Some of the value propositions of outsourcing can indeed be achieved internally. I think one thing we've explored is how there's a whole spectrum of different situations where each could find benefits of outsourcing or insourcing the function. I think we've also emphasized that the outsourced model does not conflict with the responsibilities that are remain and the liability that remains with the AFM in the case of the valuation responsibility. And overall, the different benefits of bringing the additional layer of independent analytics and the transparency and the robustness of the documentation, the outsourced model can help hit the ground running in a way, because it's an operational and standardized service, as you point out, not meaning that it's not something that can be done internally, quite the contrary, but it can help, as Anand Kumar pointed out. It's help and it's support, and it helps achieve more with less resources in house. So I think this is probably a fair statement as a way to conclude this discussion. I hope for our viewers this discussion has been insightful and maybe opened up even more questions on whether there's a need, or whether an outsourcing model is something that resonates within their different organizations. And in any case, I think we'll be opening up for questions now. Thank you very much, Pascal, Nankumar, and Daniela, for all the insightful experiences and comments and viewpoints shared throughout the conversation today. Thank you.
Thank you for the invitation.
Thank you very much for the invitation.